Petra Pospisilova, Chair of the European Banking Federation's Fiscal Committee. Do you welcome the European Commission's proposals for fair taxation?
Well, of course we welcome any, I would say, trials to invoke fair taxation. The question is always whether the chosen way is the correct one, but this is still to be seen. We appreciate that the Commission is trying to do something with the corporate taxation and to invoke some fairness into the European area, but it is still more up to the Member States' tax administration to really make sure that the rules are followed up. It will be in their hands anyway.
What do you think the main challenges for the banking sector will be?
For the future, and especially in the tax area, it would be the exchange of information for tax purposes. Banks would be required to collect a lot of information of the financial accounts of their clients for the purposes of exchange of this information for tax purposes among tax administrations. So the flow of data in between the banks and the tax authorities, this will be a major concern for the next years because this will be quite difficult.
Have you drawn any other conclusions from today's meetings?
Well, we will still have a lot of work to do because the activities of OECD and the European Commissions are quite large, and they really propose a lot of actions to be taken, and in the end it will be upon the banks and the corporations to implement the rules if they are agreed on these areas.
Andrew Hickman, Head of Transfer Pricing and the Centre for Tax Policy at the OECD. In October, the OECD presented its final package of measures to stop profits from disappearing or being artificially shifted to other countries, the so-called BEPS. Why was it so important to take action now?
It was so important to take action now because a big problem had been identified. There was a large amount of tax that wasn't being recovered, and it was important to take action in a coherent way, working with all countries, because some of the issues are caused by individual actions of countries. And if we didn't take action in a concerted way, that might encourage countries to take their own individual actions, which would exacerbate the problem rather than curing the problem. So it was important because there was a big issue, and it was important to take concerted action, working with as many countries as possible, so that the solutions would work.
And the European Commission, they have now launched their fair taxation package. Are you satisfied with these proposals? Do they meet the OECD's action points?
We hope so, certainly, yes. We're very pleased to see the EU endorsing the actions that the OECD has proposed, for example, in country-by-country reporting. There's a full endorsement of the OECD report, and so we're very pleased that the EU is taking steps to help EU member countries implement that action.
In your presentation, you said that obviously the OECD acted as an initiator on these proposals, but you also said that you will be strongly involved with the implementation. What do you think the risks of implementation are?
Implementation is very important. We've now changed significantly the international tax structure. There are lots of things that tax administrations now have to do to change their legislation. So implementation is key in a coherent, structured way. So we are working with the the countries that have signed up to the BEPS package, who are interested in joining the inclusive framework. We are working with them to help ensure implementation happens, and we will also be monitoring the implementation of the BEPS actions.
Whistleblowers have played a very important role in highlighting tax issues. We can see this in the Commission's state aid cases and also, of course, LuxLeaks more generally. Can I ask you, do you think enough is being done to both defend but also encourage whistleblowing in this area?
I suppose the best thing that we can do is to remove the need for whistleblowing, and a lot of the actions that we have been working on and that we've published are to encourage a greater transparency. It's very important that tax administrations have the full picture, so that they know the full picture of a company's tax affairs, which is what a country-by-country reporting will do. They have a full picture of rulings that their taxpayer may be involved in with other tax administrations. So we are doing a lot to encourage greater information about tax affairs, which, as I say, will help to reduce the need for whistleblowing.
Pennell's Regional Director for Tax Policy, Europe, Citigroup. You've described the OECD and EU's proposals as unprecedented. Do you welcome these proposals?
Yes, I do, and I think industry does generally. Clearly, the measures are unprecedented. They've been born of the speed with which they tried to tackle the problem. In itself, that's come about because of the public and also officials' disquiet about what's seen as outrageous cases of base erosion. But to be clear, the rules will apply to everybody, and therefore they need to be sensible rules.
And what are the general changes for implementation of these new rules?
In terms of challenges, they are so very broad. That's the key issue, is they're going to apply to everybody in all industries in all countries. And the manner in which they get implemented is quite complicated. So it might be by domestic legislation or administrative change. It might be through treaty or bilateral treaty. And indeed, some of them may be automatic through changes to OECD regulations already in effect.
And are there questions that are specific to the banks?
Yes, there are. Banks pose particular issues, but it's also very important that banks are regulated. The effect of regulation, which has clearly been the focus for the last few years of an awful lot of scrutiny, has been to make sure that banks are capitalised in the entities that face against their customers, and that very much mitigates against base erosion in its own right, and therefore there's a difficult balance to reach of making sure that the tax rules are appropriate, but they still support and don't contradict the regulatory environment.
Is there a danger that the EU will be at a competitive disadvantage by acting as the first mover in this field?
There clearly are issues for first movers. There is a risk of disadvantage in that you might move and nobody else follows you. On the other hand, the OECD's negotiations, countries are committed to move, and therefore there could be an advantage of going first, in that you're able to set a standard that others might follow, but it's a very difficult balance. It is a balance of making sure that you bring in a rule that at its heart is one that works. It works for industry and it works for tax authorities, and it supports public perception of what's going on.